Good afternoon and welcome to Nasdaq Trade Talks. I'm your host Jill Malandrino, global markets reporter at Nasdaq. It's Friday, it's 2 o'clock. That means we are doing the weekly market review with the Markets Intelligence Desk. Joining me as always is Chris Dearborn. He's managing director on the MIG. Chris, as always, thank you for joining us at Markets on a Friday afternoon. Stocks 8 weeks up in a row, not too bad, especially if you're looking at your 401k following December.
It's a nice little reprieve. We got a long weekend this weekend, so we got a 4-day trading week next week. There's been a lot of data points coming out. Again, macro, geopolitics, grabbing the headlines across the board, pushing this market higher.
Yeah, I mean, and we even, Trump signed the bill today declaring a national emergency. I guess it's anyone's guess which way that's going to go as it works through the legalities. Do you think, does the market react to that?
We've been waiting. Yeah, I think so. It does. We've been waiting for that for a long time. All this other rhetoric that he's been pushing through, trying to get Congress on board with that, even with a divided House, isn't really working. And what he needs to do is just step up, get this done, and move on from it. And that's what kind of the markets have been looking at. Markets do not like uncertainty. We like positive or negative, but we want definitive answers of what's going on. Ambiguity does not work for investors. People will keep their money on the sidelines. And look where this put us. We've been pushing higher since the beginning of the year. As you mentioned, we were on our 8th week. The S&P had 1 week down 0.2%, but not a big deal. And what you're looking at is 10% or more higher return so far year to date for the entire market. Now, put that in perspective, Q4 was devastating to the markets. And what did you have in Q4, especially in December? Uncertainty on the geopolitical level, trade tariff talks, budget shutdowns, people not going to work, all that uncertainty is starting to unwind here, and now you've got some positive geopolitical momentum. The trade talks are going very, very well.
Right.
If you believe all the headlines that are coming out there, again, devil's in the details, nothing signed yet, but the positive momentum is there, and that's giving traders a confident boost to buy stocks.
Right. I mean, there definitely is. The market is hinging on hopes of a successful U.S.-China deal. And of course, you have the FOMC, which completely switched paths in January, which for all intents and purposes, that's why we're certainly seeing the returns in the market. I don't think we would have seen that if they would have continued to raise interest rates here. But, there was a little bit of disappointing data that came out this week with retail sales. You and I talk about this all the time since the big part of your coverage is the consumer.
Correct.
That was the big story in 2018 was the strength of the consumer. That's 2/3 of GDP. Retail sales was, granted the market recovered from that data point, but I think that was kind of a shock in the system on Thursday.
It was such a shock that it's an outlier. And I think a lot of people discounted that. We opened lower in the retail market that day. The S&P retail index opened now, but still recovered very quickly off of that. And what we're looking at is the data just doesn't add up. The NRF data that came out earlier in the week before the retail sales came out, because they were looking at their own reports, gave the background that the consumer end was strong in Q4. Retail sales did come into that $1.1 trillion-ish dollars. So what we're looking at here is the data off? Did the furlough really impact that data at the Commerce Department? What happened here? We don't know. But it's such an outlier that it has to be discounted.
Yeah, well, you also don't want to question the quality of the data either, and we will get a better insight into it next week with earnings, because a lot of the consumer and retail names will be coming up. In addition to that, a lot of Fed speakers on the circuit, with the exception of Powell.
Right. We've got, without the big dog, you know, but everyone's going to be looking. You have the minutes out on Wednesday, and with that, what you're looking at is everyone just keeping the rhetoric up. You want to see what the shift was, but before the Fed meeting even took place, and before this decision and dovish tone even happened, they recanted what they initially said off of the last meeting in December. And that's what kind of took the market up a little bit afterwards. And that last week of December, the markets did rally. You're looking at a December 24th low, Christmas Eve. Traditionally a light volume day. It was one of the heaviest volume days on a percentage basis for the hours for the year. Remember, December was a high volume, high volatile month that most people were not expecting. You saw tax loss selling, you saw lower lows in the stocks across the board. And with that, you had just such an anemic market that you needed something to rebound. The Fed stepped up, they put on a dovish hat, and with that, they continue that rhetoric into January. We want to see what they actually say here off the minutes, especially with the QT, what they're actually looking to do there. If anything else, they've been out speaking about it, but let's see what they wrote down about it and what that actual debate was inside that meeting. And on the retail sales, we've got 50 S&P 500 members going to report next week in a holiday-shortened week. The retail and consumer names are going to be big next week and over the next couple of weeks. So we're going to use that individual stock information to verify the retail sales. And if that's if it all lines up, then, GDP is going to be a little light.
Yeah, well, I think the biggest concern is that we've had such a significant run. If you stayed invested from December, or if you put money into work with all that weakness, I mean, it looks good right now. But my concern is, and I'm hearing this among the traders I speak with, are they baking too much? Are they hinging too much hope on the U.S.-China deal? Because as you said before, the devil is in the details, and is that being priced in right now?
Yeah, they're chasing returns. They were on the sidelines. There's still a lot of money on the sidelines too. So not everyone's bought in yet. People want to invest, as we said, as I was saying before, when they are confident that the deal is done. They don't want to speculate, because look at the retail sales that came out. It doesn't jive. It doesn't match up. And you could be caught off guard on any speculation once the true data or the deal gets signed. People want to invest, they want to protect their principles, and then they want to go where there's confidence. It'd be great to capture a 25 or 30% return, right? Wouldn't everybody? But realistically, you're also risking downside exposure there. So would you rather protect your principal and have a 5 to 8% return and a protected principal, or take that risk? And that's what traders are going to make the decisions based on.
All right, Chris, enjoy the long 3-day weekend.
You too, my friend.
And thank you for joining me throughout the week. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.